Hello friends, welcome to the channel, The Trading Couch, where you learn and earn together. This is one more episode of the end of the day chart analysis. Yesterday I had posted a short video on how the market would behave, and exactly the way it was predicted. The market came down, filled up the gap, and went on to move further higher up. So let's replay the candles and see where exactly the trade could have been taken and how it turned out to play in the favor of the trader. Due to the world market, the Indian market turned out to have a gap down opening, a huge gap down opening of around 80 to 100 points, and because of that, the open was almost near the gap border, and the first candle continued to fill the gap. Okay, so you can see this long bearishness. This continued with the market pre-market sentiment and continued downwards towards filling up the gap. And the next candle was almost, it filled the area. So gap border means it's not an exact point, it's just a zone. So near the zone anything can happen. So you can see the indecisive candle or a doji candle, long doji candle, which predicts that the sellers are indecisive, or the traders are indecisive at this point or this zone or this price. So let's see what happens now. Now you can see that there is one inside candle. So usually in how inside candle can be played out in the favor of the traders entries is that you can draw a line of the high and the low of the mother candle, and whichever direction the price breaks out, you can take an entry there. For example, if it breaks out about this, then you will have a long entry with the stop loss below the low, and if it breaks down, then you will have a short entry with the stop loss being the high of that doji candle. So this is how the trade has to be played out. So let's see what happens here. So you can see that a long bullish breakout candle formed, showing the strength of the bulls. Here what we can do is we can take the Fibonacci tool, draw from the low to the recent high, and you can see that wherever the pullback is, it has to happen between the 60% to the 30% area. So between this area, if you see any bullish candle, then that is the signs of pullback, and any person who has missed out on this entry can take an entry here. So for example, you can see that you have a bullish candle here. So one can take an entry, long entry here with a stop loss and the target being the CPR. So this could be our second opportunity in taking an entry. You can see here that the price almost hit our stop loss, but having a mindful stop loss below the 38% region of the Fibonacci area. So you can see that there was a consolidation here near the 50% to 60% area, and from there was a breakout. So this marks us or gives us the third opportunity entering into the trade. The market gave momentum during the last half an hour of the trading session, and thus it hit your target. That's it guys, thank you. Keep watching my videos and shorts for pre-market and end of the day analysis, and also any technical analysis of how to take entries and how to predict or how to read chart patterns. Thank you.